Welcome to the SBDC's Business Blueprint, where we guide entrepreneurs through the building blocks of business success, one insight at a time. I'm your host, Jeffrey Beckles, and today we're looking into the financial challenges faced by entrepreneurs as they navigate the high cost of doing business in today's business landscape. We've got a dynamic discussion lined up with someone who's no stranger to the SBDC and the financial sphere. Gowon Bowe serves as the Group Chief Executive Officer of Fidelity Bank and Trust Limited International. I know that you have a wealth of knowledge in this space, and so let's get right into our conversation today.
Thank you for the invitation.
Good to have you with us today. Most times we hear from entrepreneurs, and some new and some existing, their initial feedback when they engage the bank is that the bank doesn't want to work with me or the bank is indifferent to my request. We found that sometimes it's relative to how they prepare themselves to engage lending institutions. Talk to us about what entrepreneurs need to know before they engage a lending institution.
I think, Jeff, sometimes the greatest challenge is entrepreneurs don't appreciate who and what they're approaching. And by that, what I mean is we live in an information age, particularly today, that gives the impression that we are very similar to whether it be North America, Europe, and advanced territories, not appreciating that there are different types of funding entities. The traditional bank is one that is more conservative, and for a very simple reason, that it is a fiduciary agent managing other people's funds. When we look at some of the larger institutions that we hear, whether it be the Banks of America and the JP Morgans and the like, it's not always appreciated that they have different divisions. There's a commercial banking division, which is probably the same as what you experience in the Bahamas, and I'll come back to that. But they also have a venture capital division, which is effectively taking greater risks because it is seeking to take risks by virtue of that's the business model. And so sometimes we hear the cries, and I as a banker now appreciate that they come in with an expectation, or I'm going to say a hope, that there's someone willing to take a risk versus lending money. And those are two different elements. If I say to you, in your pocket, you need to lend money to a person, just as an individual, you will be discerning in terms of, well, what's the history? What's the likelihood of getting it back? If I said to you, invest in a startup entity, you go in with the knowledge of saying, well, yes, it may be speculative. It may have greater risks. And I am going to determine how much I put into it as an investor versus a lender where your whole intention is, I want to get it all back. So I'm not taking that level of risk.
So it is a business-to-business engagement.
It is.
And because it is, it means then that the entrepreneur must do certain things before it comes and engages you. What are some of those things that the banks look for, lending institutions look for in that initial engagement?
I'll say that, and sometimes it may seem overcomplicated, but when you break it down to how you run a business and a successful business, they align. The first thing is a bank is looking for you having skin in the game, or we use that term. So the first thing is if you approach to borrow money, and the first question asked is, how much do you have invested? And you're saying, well, I come in to borrow money, right? There's always going to be that hesitation, because if you have nothing to lose, meaning you've not put any of your personal resources, or even if it's a collective investor group, any of your personal resources, your assets, your reputation on the line, then if things go bad, what are the chances that you will stick it out? Because basically you're playing with house money, if I use it that way. You're playing with someone else's money. So the first thing is skin in the game. The second thing is to say that you actually have a clear plan that can withstand challenge. The saying goes, paper's never met any ink that it resists, right? So you can put anything on paper, but can it withstand challenge? And that's not a negative. If I'm asking you, well, you said you're going to have this fantastic number of sales. And I ask, well, what's the price point? What's the price elasticity? Are you sure you can achieve that price? Do you have that many customers that are available? And when I start drilling down, whether it be the population, whether it be the demographic sector that you're trying to engage with, it comes down to saying, well, are you certain that these numbers can withstand challenge, not only in terms of that oral challenge, but when you face this in business, are you going to be able to
So
do
the
so?
plan must make sense.
Exactly.
You mentioned risk, skin in the game. Lending institutions want to see how committed you are by that.
Precisely.
It is also risking in that they need to understand, should I take the risk on you? So your creditworthiness, your reputation, who you are in the community are all factors that go into it.
As youngsters, we don't always appreciate. Our forefathers always tell us, be mindful of the things you do today,
Right.
because they will come back to haunt you in the future. And yes, every business, no matter how large or small, has a grouping that their reputation determines how far they go.
Right.
The original founding shareholders and the groupings that come together before getting into public ownership, right? And so from that perspective, young persons need to be encouraged to start their credit history almost from toddler.
Yes.
Right? That you have a savings profile. And then when you get to that adult or that pre-adult age, and you're having a prepaid card, and then you move to a credit card that may be under mommy and daddy, and then you move into your own credit card, you're looking at your first sensible vehicle purchase, you're looking at your first home purchase, all of those things.
There has to be a clear understanding that they're coming to ask for somebody else's money that you have charge over. So there's a degree of responsibility that you have before you give someone else's money to the applicant.
And I'm glad you put it exactly that way, because I think oftentimes they see it as the loan officer or the CEO, the underwriter, like it's you who holding me back. And I try to explain in a very pleasant manner that, the reality is the persons who deposit and fund the bank could lend you directly. There's a reason why they've chosen to deposit and let the bank, if you will, exhibit credit risk management characteristics and loan administration. So from that perspective is exactly as you said. We are fiduciary agents managing other person's money. So we have to answer an account to our shareholders, our depositors, and we have to be able to say, I thought Jeffrey was a good credit risk, and these are the reasons why. And it's not because he had a wonderful idea. And the last point, even outside of the plan, is also understanding what your cash capacity is, meaning that debt is not a bad thing, but you have to know how much do you have available to service it. And every large business has a balance of debt and equity, and we may speak a bit of that to say that is sensible for that industry. But the truth of the matter is that is determined by your cash flows. And from that perspective, not always businesses appreciate that revenue and profits don't equal cash.
Right. You said a lot in this first segment, and I think our listeners really were able to understand it in the very basic way that we put it. We're about to take a short break, and we'll continue our conversation when we return.
So my name is Dr. Sophia Roll. I'm the resident artist for the Via Hamea Art House and Gallery. This is not something that I've gone to school for, if you will. I'm a professor. I recently got into art in 2015 because it was something that I always wanted to do. I saw something about fluid art, the abstract expressionism of fluid art really drew me. And so I'm always thinking now about art. I see the world through art. So that is, for me, very, very gratifying, very, very satisfying. So receiving the Women's Initiative grant really impacted the business because it allowed me to see in that I could have taken my craft, my art, outside of the gallery walls and really maximizing on some of the training, some of the skills that we learned. The advice that I would give to not only women, but anyone who's interested in starting a small business or starting a business is to just get started. You have to take the first step. And if you take the first step, you'd be amazed at how far you can continue to walk in that space.
For more information about how the SBDC can help your small business to make a big impact, give us a call at 461-7232 or visit sbdcbahamas.com.
Fidelity, we're good for you.
We know how important collecting your money can be to the success of your business. Start your relationship with Fidelity today so that we can show you the many options available to you with our merchant services. From click and pay options online to merchant terminals and e-commerce options. We're here to help your business succeed. For more details, speak to one of our business development officers at 356-7764 in Nassau or 352-6676 in Freeport. Visit our website at fidelitygroup.com or visit any of our branches.
Fidelity, we're good for you.
Welcome back to the SBDC's Business Blueprint. We're here with Gowon Bowe discussing the entrepreneur's banking battle. And so, Gowon, in our first segment, we talked about risk, we talked about the assessment, we talked about the responsibility of borrowing somebody else's money. Let's talk about the differences in fees. Entrepreneurs constantly talk about the challenges of bank fees, but there's a difference in that there's retail banking, there's commercial banking. Talk to us about the differences in those three structures so that our listeners can understand more effectively.
I think it's really trying to break down where's the end consumer. When you look at the retail banking and talking about an individual, they generally, when they're banking, it is for their own proprietary benefit, meaning they are either saving, they're buying goods, they are settling bills, making loans. When a business banks with a bank, they are effectively themselves becoming, if you will, an extension of their customers. So when you think about any successful business, it has to have more revenue than it has as expenses. And so when you look at fees that are charged to a commercial business, I think it's important for entrepreneurs to realize that that's a cost of doing business that needs to be factored into the pricing. Sometimes the confusion comes about saying, well, I have my personal account and it's charging this amount. And I have my business account and I'm still a sole proprietor, but it's charging me, let's say, 2 times that amount. And so it's unfair or it's inappropriate. But in the first instance, the bank is providing a service to you and only you. In the second instance, it is providing a service to the business that is then onward selling to customers. So whether you're selling goods, whether you're providing professional services. So when you're facilitating their ability to pay, the volumes of transactions go up. The complexity of the transactions increase because it's now coming from multiple sources. I'm not meaning a bad thing. I'm just saying that the monitoring is a different landscape. And then ultimately, usually, if it's successful, the quantums are different. And everyone has a belief that money going into the bank makes the bank money. And the answer is it doesn't. A deposit actually costs a bank because you expect some interest, even though I know some don't pay much interest. It also has the people who have to manage it, whether the segregation of duties or otherwise. So ultimately, when you deposit, there's immediately an outflow. If it is not able to be lent or invested, there's no inflow. And so when you talk about holding your money, sometimes I've heard some of the political leaders across the Caribbean saying, you're charging me for safeguarding my own money. And the answer is, yes, I am. Because if you put it under the mattress and you have hurricane,
but you know,
any event.
Some people will argue that, and perhaps we'll invite you back to talk about this at a later time, because the degree to which banks talk about profits versus what they pay in interest, well, it's a growing concern.
I'll give a very brief one that sometimes, because we don't put the relative numbers, so if you hear 50 million in profits, do you understand the amount of equity at risk? So if I said to you that that was 500 million at risk and there's a 10% return, you probably would say, it sounds high because you only give me 1% interest. But that 10% return versus you could lose 50 million, right? So the volatility and variability says
It
that certain
offsets.
businesses require a certain level of return.
Now, in your previous comment, you mentioned the cost of doing business. Unfortunately, most businesses don't see the fees that they pay for banking services as a part of cost. They see it simply as quote unquote punitive toward them.
Taken out of their profit.
Right. But at the end of the day, businesses need to also appreciate that that cost of doing business with the bank is relative to them being able to pass that through to the customer in all fairness. So that's a learning point that most businesses need to appreciate.
And how they do business. So use the perfect example when you talk about using cards or having a card terminal. Most businesses, particularly small businesses, speak about the merchant discount rate or the charge on per transaction. And that's usually a relative percentage. So on average, you see 5%. Depending on the volumes, et cetera, it could go higher. But what they're not comparing is apples with apples, because they see that as a cost because they see it immediately coming out. Now flip to cash. What is the cost of actually taking cash into your establishment? All banks are charging you for cash deposits now because managing cash, the security and the risk is elevating. So the armored car vehicles, the vaults and all of that has costs. So you're paying when you deposit your cash. You have an exponential risk when you hold cash on your property, whether it's through theft, whether it's through some nefarious activity. Our employees who, one for you, one for me,
We
when
call,
dealing
we
with
call that thief in the Bahamas.
that vernacular. You then have, okay, well, what is the actual insurance cost if you were to insure it, which most businesses don't take out? The security officers that I have at the door. So if I'm trying to compare my 4 or 5% discount rate on a card transaction, what is the actual cash transaction? And because I don't see it on the upfront, I don't always have an appreciation that it may be costing me 10% or more. And particularly if I insured it the way I should, it would probably be even higher.
Some may argue that these activities of managing cash, well, and it's a fact, have been with us all along. Why then, in today's environment, does it appear to be more prevalent? Is it because the banking landscape is evolving and there are additional options, but consumers like handling cash, and therefore it costs more? The cost of handling that cash is now prominent?
The reason why the cost of cash is becoming higher is because, if you will, technology has evolved, and therefore there's been an identification of a more efficient way of transacting.
Right.
So before, if you think about just going how far back when you have to send telegraphs and you used to have to send, through a system that was really realistically relying on the mail system to go. One, time-wise, two, the risk of loss, and all of the others were factors there. Now that you're able to do it digitally, it reduces the cost, it's faster, it has a greater audit trail, it has greater security features around it. So where is investment coming from in not only the financial services sector, but generally? It is looking for how do I do things smarter and more efficient and less costly. And so those who are the last of the Mohicans and want to hold on to the legacy payment, they have to appreciate, well, there's no more scale.
Right.
There's no more economies of scale. And so from that perspective, the individual cost is going to go up. And, Bahamians, we are funny characters. We don't want to wear our seatbelt in the Bahamas, but as soon as we reach Miami, we click.
So we could understand another.
When we go into Europe, we carry our card because we know if you use cash, you look like an alien, right? But at home, I think we sometimes resist change because we feel it's forced. And that's a criticism that I take on as the banks, that we have to be very, very careful. We only exist because of the pleasure of our customers.
Right.
And so it shouldn't be that it makes sense and therefore we treat them as if they are less than because they don't appreciate it.
Right.
We have to give that spoonful of sugar to
Having
make the
said
medicine go down.
that you exist at the pleasure of your depositors, small businesses are the backbone. Before we go to our break, speak briefly about some of the programs that your institution are implementing that will be favorable to small businesses.
Well, it starts by saying, how do we educate them to have greater visibility into their financial resources. So when we promote the merchant card services, it's not only because you have a terminal, all of the reporting that comes behind it and information. So you now start to see who is it that has spent with a card, but you have the data that's connected to their card, and you can see their spending patterns, and you know to follow where they're spending even in your own establishment. On business savings accounts, bear in mind that a business really should not be keeping excess resources in cash. Because if the business is doing well, reinvest it into the profit-making enterprise. The treasury management, what is sitting in cash is for your liquidity coverage to make sure that on a rainy day and you have the cash available. But excess, you should be looking at term deposits, looking at investments. And so it's about the education to say that the financial coaching, the reason why SBDC is so close to both you and I, having been from the Chambers side, it is so important to have the incubator initiative, because persons go into things looking at what they see as the end result, not appreciating what goes into it.
Well, thank you so much for that, Gowon. We'll continue in just a moment. This certainly has been a very insightful conversation today, and we thank you. When we come back from our commercial break, we'll be getting into our mentorship moment with Ariel Pinder.
I was an electrician for 18 years, and one day I just lost my sight and found that I was in a totally new world. I just found this strength that came from nowhere, and here I am today. Even though I am faced with disabilities, the fire in me, it never went out as related to me being an entrepreneur. But the barrier is just people being understanding and willing to take a chance on somebody like myself. My dream is to see where the government can really pass laws, legislation to assist people like myself. And whether you believe it or not, we do have something to offer this country. We have to make people understand that we are here. And not in many cases we're looking for handout. We want to make a contribution. You gotta live. And part of living is that you gotta take charge of your life. And through programs like this with the SBDC, I know for a fact that my business can now come to life.
For more information about how the SBDC can help your small business to make a big impact, give us a call at 461-7232 or visit sbdcbahamas.com.
I am a master plumber by profession. I've been doing plumbing for over 40 odd years. When I was 9 months old, I was diagnosed with polio. To me, living with polio, I took it the way it is. I never allowed my polio to get in my way of anything. In fact, I love when people doubt me, and I just prove them wrong. And let me tell you, in the world, you could only find a plumber as good as me, but you ain't gonna find no plumber better than me. People with disability, they just need a chance. In this program, I feel so encouraged. Most of the mentors have different kind of disability, but disabilities like me. Sharing and caring and showing so much support with people with disability. They would encourage you to go beyond. I wish this was around a long time ago. Right now, I would have been a millionaire. You out there who have a disability, don't be afraid. Take the step. If you believe it, you could achieve it. And remember one thing, ain't no one better than me, and ain't no one better than y'all. God made all us equal.
For more information about how the SBDC can help your small business to make a big impact, give us a call at 461-7232 or visit sbdcbahamas.com.
Thanks, Jeffrey. Hi there, I'm Ariel Pinder, back with today's Mentorship Minute. Now, let's talk about building a strong online presence, which is a must-have for any business today. Start by claiming your business listings on Google and social media platforms to make it easy for customers to find you. Keep the look and feel of your business consistent across these channels to build recognition and trust. Post on social media regularly, but focus on quality instead of quantity. Share updates, tips, or client testimonials to connect with your audience authentically. Remember, your online presence is an extension of your brand. The Small Business Development Center wants to help you succeed as you grow your business. When you need help developing your business, reach out to us via sbdcbahamas.com. We'll be back after this commercial break.
My name is Omar Ferguson. I've been disabled now from 2000 and 2009. What inspired me to start my own business? It was the determination to know that I still had something left in me, even though a lot of my independence, my mobility was being restricted. In my disability, it's kind of hard finding the investors or the capital. For example, national insurance. The benefit that we receive, it's a lifeline. And in any business that you're going to take, it's going to be a risk. We're not looking for handouts, but we want you to understand that we still need a little special care. This literally gives us a backbone that, hey, we could actually stand someday. This is the business I know it's going to be a risk. Even going through that process, I'm still dependent on national insurance. Overall, being in the program itself has put me in a place where I feel young again. I feel like anything is possible. I would say to others with disabilities, look around your community, just like you guys said in one of the modules. See what is needed in your community and go for it. Don't be afraid, just go for it.
For more information about how the SBDC can help your small business to make a big impact, give us a call at 461-7232 or visit sbdcbahamas.com.
Thank you, Ariel. As we wrap up this episode, I certainly want to thank our special guest, Gowon Bowe, for joining us. And we hope that this discussion has provided you with useful information and inspiration. Gowon, as we wrap up our program today, we've been talking a lot about the evolution of the banking sector. Give us your insight as to how you see the Bahamas' banking landscape evolving in the coming years and how businesses must prepare themselves.
I go back to just our daily lives. I remember going to university and the only means of communicating at home was by letter. And it took, 2 weeks for it to get there, 2 weeks for it to get back. We then moved to the phone system, and if you were fortunate to have a calling card and were able to call home periodically, to nowadays, parents, grandparents stay in contact through whether it be FaceTime, social media, Zoom. And so I think that, but it's still communication and it's still engagement. And so we've seen it in our day-to-day lives. And we have to appreciate that that's going to happen in the banking landscape. Are we going to see more branches? No. We're going to see less, but should that mean less service? And the answer to that is no. Okay. It just means how you interact. I would summarize it in this way, that you really only want to go and see your banker when there's a value-added service that you need. Okay. If you're looking for a loan, if you're looking for merchant services, you're looking for investment advice, that's when you want to engage. And all other ones, learn to do it on your own. If I hire an electrician to change a light bulb, I have to pay his service fee plus the cost of the light bulb, and I could do it myself. So learn how to do certain things on your own, and then be discerning, because as the consumer, you are not going cap in hand. So you need to be demanding. And if your institution doesn't deliver what you need, then I simply say find another institution. And we'll talk about KYC and all the AML later in a different time. But the reality is, once you've done it once, you kind of know the pain, and so you should keep all of the records so that you can move. And I think we do see the regulator in terms of wanting to increase the transparency and the engagement. And banks would be foolish if they turn a blind eye to that, because it is your money as the small business, as a depositor. It is your money as the merchant who is providing the services. It is your money as the borrower. And if you get the excess funds and as an investor, it's your money. So us as banks, in terms of the management and staff, have to respond in that positive way.
Right. The sector is evolving, and it will continue to do so. But you mentioned the importance of knowledge. And this is why we talk about the partnership between SBDC, both of our experiences in the chamber, and even your entity, who has been a very high-profile supporter of the SBDC. The SBDC is a growing and evolving resource for young entrepreneurs here in the Bahamas. So as we close today, what then would be the key advice that you would give to young entrepreneurs as this landscape continues to evolve, as we continue to believe that small businesses are the backbone of our economy? they are definitely going to be playing an incredibly important role going forward. What advice would you give? What would be your key advice points that you would give?
Is one word: mentorship, because someone has always been there and done that, and that's why the SBDC is critical, because it was designed with the intention of bringing those established businesses to interact with those who are seeking to do business, and you will then learn what they went through. Secondly, I would say that it is super important that knowledge is power, and you recognize that. So you arm yourself with all of the knowledge. If my colleagues in banking may push back on me when I say this, don't walk into a bank cap in hand looking for a favor. Walk in with a proposal
Right.
that you are confident in, and you are demanding support for it, not because you're seeking them to do you a favor, but you're telling them it is a good investment
Right,
choice
right.
because you need to deploy your money, and I am a good risk.
Going back to what we said in the earlier segment, it's a business relationship. So we're seeking this partnership on which we will build.
Precisely.
Gowon, thank you so much. Thank you for joining us today on the SBDC's Business Blueprint. Until next time, turn today's insights into tomorrow's success. We'll see you soon.